Buddy, it is Friday, the 26th of August, 2022. This is Brian Shannon from Alphatrends.net speaking. We had an ugly week here, so let's take a look at these numbers first, then we'll get back to those charts. For the week, we were down 4%. The majority of the losses obviously came today with a real strong sell-off. The NASDAQ today lost 4%, bringing its loss to about 5% for the week. Everything turned back to negative on the month. I accidentally have that colored red, but the Russell 2000 is actually positive on the month, only slightly, but still had a rough week, down 3%. So let's take a look at these charts and make some sense of the action. I just posted on Twitter that when the market's been rallying, it's been really convincing. There's a lot of loudmouth people who tell you, the bull market is new, a new bull market has begun. Any short sale is stupid. Just buy and hold on. And then when it starts to decline like this, you see the tide turn, and everyone's saying the end of the world is here. We're going back to test the lows. The bottom line is, if you just stay focused on price action and be aware of the key levels, you can make a lot more sense of it. In particular, if your time frame is like mine is, a swing trade. We knew that it was a reason to be quite cautious last week when it got up to that declining 200-day moving average in the trend line. Then when we switched to the shorter term time frame, last Friday, we gapped below the 5-day moving average, and that turned the market at that point guilty till proven innocent. You didn't have to get out at the high to be able to avoid a lot of the losses. This market this week, we still had a declining 5-day moving average. And if you go back over the last 15 years since I've been talking about this 5-day moving average, I always say the direction of the 5-day moving average is more important than whether it closes above it. And today's action, that gap open, brought us right to almost precisely the volume weighted average price from the peak that we've seen this month. So let's back it up to a 30-minute time frame. And you can see here, this is what we've been talking about, some of the key levels. That is the low that we have seen this year up to the recent high. We've come down to a perfect 38.2% retracement. In doing so, we got back below the March 29th volume weighted average price in the VWAP from this low. So does that mean the selling is over? As always, I think you still have to look at it and say, we want to take it one chunk at a time. We don't want to buy dips. We don't want to buy the market when it's below a declining volume weighted average price. This purple is today's volume weighted average price. When it's below the daily volume weighted average price, there's no reason to buy. You can make money on these little rallies, but the sum of the declines will always be greater than the sum of the rallies in a decline, in a downtrend. So we got pretty sold off here, down 14 points. Monday, maybe we get a bounce. Who knows? And if we do, this is our first bigger level of likely supply that would be strong enough to become resistance. I'm not calling for a rally on Monday. I don't have a crystal ball. I know is I'm in cash right now. I don't have a short position I'm willing to hold over the weekend, and I'm not going to be a buyer into this weakness and hope that it gaps up on Monday. That's not a low risk strategy. I'm all about trying to control risk. Risk management is job number one. I'm not the best stock picker, and I'm certainly not the best trader out there, but I'm good at both of them. My main strength comes from risk management and knowing my time frame and sticking to a disciplined process. That disciplined process, as you hear over and over week after week, is I don't sell short if we're above a rising 5-day moving average. I don't buy if we're below declining 5-day moving average. And that means for each individual stock as well. If the market is below a declining 5-day moving average, but an individual stock is above the rising 5-day moving average, then I look to buy that stock, but I use the market information to say, how aggressive should I get into this position? Should I be really aggressively sized into it? And the answer is, of course, no, because we're still below a declining, 40-week moving average. The bigger level that we have the potential to come down to next week, and it might take a bounce first, but if we were to come down to the 50% retracement of this low to this high, that would bring us down to the 50-day moving average, and more importantly, important, I think, is the volume weighted average price from the year to date low. That's that thick green line. So that's to me the most important level. If we do this over the next week or two, that would certainly be a level where I would look for the potential of a bounce. Now it does, and I would call it a bounce because it might just continue lower. And when we look at the weekly time frame, it might do something like this. This is what I sketched out last week as here's a potential bullish scenario, is that last week maybe we would rally up to that 200-day moving average, 40 week that is, come down and still turn. And that's possible, but that's for the longer term picture. As a swing trader, I look at this and say, here's what's most likely. How do I get into a position where I can benefit that as best as possible while keeping my risk as low as possible? The Nasdaq had a similar type action, of course, and here we can see in that 15-minute time frame, the direction of the 5-day moving average was lower all week, and there was no reason to trust the rally, especially when it ran smack right into that volume weighted average price off of the peak that it made earlier this just a couple weeks ago. In here, we've got the 50-day, I'm sorry, the 50% retracement of this low to this high. So this is the 38.2% retracement, 50%, 61.8. That is a potential level that the market may bounce. To me, it's strengthened and more important because it's the volume weighted average price from the low. So that's a level of interest on the downside. In the Russell 2000, we saw here that we're right on the volume weighted average price from the COVID low. So that right here is, what we're looking at on the daily time frame right in here. Below that, we have the volume weighted average price from this low and from the low that it made this year. So let's look at that on the 30-minute time frame. Same thing. We've got the this low to this high. A 38.2% retracement brings it right here to 187. That's also the volume weighted average price from the June low. That adds significance to that level as a potential level that might offer enough demand, where demand might be strong enough to slow down the selling. Buyers become interested, supply dries up, and then perhaps we see that's how support forms. Then we get a bounce. If we get a bounce, does it do something like this? We don't know. We can anticipate, and we have to say, where has it come from? It just dropped 6.5 points today. Now's not the time to be an aggressive short seller. By the way, I'm running a sale on Alphatrends. I don't do it very often. Alphatrends.net. It is really a good deal. The annual subscription for is typically $999. What you get for $799 is that subscription, which includes every single day market analysis at the end of the day as soon as the bell closes. About an hour later, I go through another video with stock trade ideas with every reason for being interested in those stocks for swing trades laid out in a second video. The next day, I have a midday video where I update each one of those stocks. So these, the end of day video is about 4 or 5 minutes. The stock trade idea about 10 minutes. The midday video the next day is about 4 minutes. I also do a live webinar for subscribers only, where you get the chance to have your questions answered about educational questions. I've got a forums on alphatrends.net where you can have me give you feedback about individual stocks you're interested in. And with this sale for $799, you also get 2 courses, the beginner course and the advanced course. It's about 13 hours of video material, and you get a 30-minute one-on-one with me. So be sure to go to alphatrends.net. I'm going to cap it. The sale goes through Labor Day, Monday, Labor Day, but it might end earlier if there's too much demand. I want to make sure that everyone who comes aboard gets a chance to do so in a way that it's not overwhelming. There's too many subscribers. So go ahead and check that out, alphatrends.net. Thanks for the commercial interruption. Semiconductors are down to their 50-day moving average, and the volume weighted average price from the low has been breached. That's that purple one. From the prior low, that is still just below here. So this is, as we know, the semiconductors are often a leading group for the Nasdaq, and they are showing extreme weakness. So be aware that that could be, a precursor to bigger selling in the broader market. This market, same story. declining 5-day moving average is what kept me from buying into this nonsense right here. If you're going to buy these rallies, there's nothing wrong with day trading them. But when the 5-day moving average is declining, it's guilty till proven innocent. It's no different than looking at a daily chart and saying, hey, I want to get involved in Coinbase when it doubles. Be involved in it, but only for short periods of time because it's still a garbage company, as is Zoom. This one has had many bounces, but look at Zoom. Look at the complete lack of risk management from the ARK funds. This is their number one holding. They just went this week from 7.4 million shares to 8.1 million shares. Their average price dropped all the way from 200 down to $283 per share. That means they own 8.1 million shares at an average cost of 283. So they're down $202 on 8 million shares. That's 1.6 billion dollars. Don't buy the dip, but don't buy the weakness. $1.6 billion. Stop giving this woman money to run into the ground for you. And it's not just that stock. You can look at the top 10 holdings. Roku, same story. Look at Roku. And Roku is just another absolute disaster. You can look at Tesla and say, what about Tesla? But look at how all the buys into this downtrend, buying weakness is a sucker's game. Tesla is the one good stock, and she's been selling that one. So I'm not trying to pick on anyone. I'm pointing out, as I always do, that risk management is always job number one. And that's my focus each and every day at Alphatrends, is to help people make more money, help them avoid losing money, and give you daily education that you can put into action in the market and find your time frame. Just because I'm a swing trader, I talk about swing trades, doesn't mean the same principles don't apply to longer term time frames. That was the point of what I just said right here, in that when we have a declining 5-day moving average, it's guilty till proven innocent. Don't buy. Don't buy stocks like Meta because you think it's a good stock with a declining 50, 100, 150, and 200-day moving average. They are garbage stocks. Nvidia is a garbage stock right now. I know everyone loves it as a company, but it's got a declining 20, 30, 40-week moving average. Stay away from stocks like these. They will hurt your longer-term wealth. Peloton had this rumor this week that there was, it wasn't even a rumor that, Google was going to sell their stuff that they can't sell themselves. Well, look at what happened. The same thing we saw last time. The March 29th volume weighted average price was the exact high here. Well, look what happened on Wednesday. Same thing. Then they turned around and reported earnings, and all the poor people who bought into the news ended up, losing money on it. It's just a sucker's game. Focus on price action, not what you read in the news. That's what I'm here to help you with. Financial stocks are looking like they're heading down to the volume weighted average price from the beginning of the year. Let's take a look real quick at Coinbase. Not Coinbase, but this is Bitcoin on Coinbase. And here on the left is a daily chart. You can see that we're below the volume weighted average price from the low it made earlier this year, and we've been stuck below that. That's this detail over here on the right, which is constructed of 4-hour candles, and you can see how that volume weighted average price held as resistance, and we're seeing another sell-off. All of these things are in downtrends. There's no reason to be a buyer of this stuff. This week we we got short BNTX in Alphatrends. We got long ENPH over here and sold out of our last piece right in this area. We got involved in Albemarle over here and got out of our last piece here today. Yesterday we got involved in ACLS right in here. We took a third off right around this area. We sold a third here and another third here today. This is just yesterday. The stock was up from 72 to 83. Today it's all the way back down to 72. It looked great for a moment, but if you're not managing risk and if you don't fall in love with the companies, there's still opportunities to make money in this market. I can help you do that. Sign up at alphatrends.net and have a good weekend.